right, guys. We've got a super exciting panel here on DeFi Renaissance. I think we're in a very exciting time right now. I imagine most of you guys probably have been through multiple cycles and went through this last bear market. And I've got to say, I've been to a few different conferences over the past few months, and it's really clear to me that we're back, right? These bear market conferences were exhausting and depressing. And I actually met Tracy from Istari in Denver, and Denver was the first conference that I was like, oh my God, we're back. This is amazing. So really thrilled to be here. We got a great panel. A little bit about myself. I am the head of a product called Superposition. We have built a different way of doing risk in a much more TradFi best-in-class sort of way, and we've built out a borrow lend around it. On our panel, we've got Mike from EtherFi, we've got Ryan from Maple and Syrup, we've got Omkar from Nexandria, and we've got Eyhab from Breach. So the first thing I want to talk about is we've seen during this bear market, the bear market that I feel like we're coming out of, a lot of different projects struggle with low liquidity, and we've seen a number of different narratives that have kind of risen and fell during this cycle. What lessons do you guys feel like you've learned during this past cycle going into this new bull market? I'm going to start with Ryan.
Yeah, absolutely. And I definitely think from, like I said, the institutional side, a big thing that we all learned was counterparty risk, right? Counterparty due diligence. And what we're seeing now is capital allocators, they're not willing to put, their capital into black boxes. They want to understand who's on the other side of the deal, if there's collateral involved, where is that collateral stored? Is it in a smart contract? Is it being rehypothecated? Is it in a custody solution? So they want to know all those things, and then particularly, if once they get comfortable with what is happening on chain, then it kind of gets to the OPSEC, right? What is happening off chain? So I think increasingly more and more, it's just overall, what is the risk management processes are in place? Last cycle, it was great and we got definitely adoption and it was growing. But I think what we saw a lot of is, it is quite a small industry. So when you don't know, who you're lending onto, who the counterparties are, it can become quite interesting. I think, follow on from that also that we definitely learned on ourselves and learning is like borrower concentration. So, what is the concentration level in the pools that you're lending to? And it's kind of linked to like the counterparties I mentioned earlier. So I think they're like the key learnings that we had and then that we put in place into what Maple is now today. But yeah, I'll kind of pause there and let some of the rest of the panel chat.
Yeah, I mean, one of the things I'm really hearing from you, asset safety is very important, right? We're focused on the same thing. I mean, any of you guys other have thoughts on this as well? On narratives that are working, narratives that didn't work, learnings from the bear market?
Yeah, I mean, I think there's a lot to take away. What we found, I guess, in the last couple of cycles is that certain types of DeFi protocols had much more durable kind of liquidity, whereas others kind of fizzled out and have almost like the classic DeFi chart where it's like a spike and then down only for a couple of years. So one of the categories that seemed to be quite durable is staking. One can imagine lots of different reasons for that, but it is a little bit like, it's somewhat of a mystery, like why staking in particular. I guess maybe because with ETH staking, like lots of people are long ETH for a long period of time, and so whether the market is up or down, they may as well earn some yield on it. And that was certainly one of the, among others, one of the reasons that we decided to focus on EtherFi as a product category, because staking was the largest and still is the largest category in DeFi, and because staking had that kind of durability across different cycles.
Any other thoughts from you guys? What other narratives do you guys think are going to be strong in this cycle? I mean, I'm bullish on staking as well. I know staking is a big narrative. It fits into what we're doing. What else are you guys bullish on? I'm going to pick on you, Eyhab.
We were talking earlier about like bridge hacks and stuff like that, and it being something that people and platforms and our industry has generally learned from, I think that we're gonna solve for it. I do think that like there are things that matured, 7 or 8 years ago. Qualified custody exposures were really scary. We've matured out of that. Traditional DeFi, smart contract exploits, they're less frequent, and I feel like bridge hacks were where those things were not that long ago, and I feel like this cycle, enough people are working on it. You were sharing a new concept with me that I hadn't heard about, and I think that we're going to work around it, and I think that that's something that I'm personally looking out for.
Right. So again, back to asset safety.
Trust and safety.
Yeah,
Trust and safety is paramount. Absolutely.
Totally. Ryan, any thoughts on emerging narratives?
Yeah, definitely, and it's I have mixed opinions on this narrative, RWA. I'm definitely not a fan of the name, but we can look past that. I just think of them as traditional assets. I think it's been a big narrative over the last 12 months. I think there's probably a gap in people's expectations of the speed and velocity of RWAs. I'm definitely I'm not going to sit here and say I'm not a believer in tokenization and the future of that. I just think we're very far off, tokenizing mortgages and putting that on chain at mass scale. I'm not saying that people aren't doing it. I think what we're seeing is, there's pent-up demand on the borrower side to tokenize things, and just because you can tokenize something doesn't mean you probably should do it. Because on the other side of it is, how do you match up that liquidity? So I think, last year there was a plethora of tokenized treasury bills, short dated. It kind of fitted in with the where we were in the cycle last year. Yields on chain were quite compressed, so 5% on chain was quite interesting. But fast forward to this year, yields on chain have spiked, so 5% for treasury isn't that interesting. But if I look forward to other type RWA things that are being put on chain, the yields that you are still seeing from those things are probably sub 10%. And there's probably like a risk premium at the moment for people to allocate their capital on chain. And what we're seeing, it's probably like 10% on SOFR, which is 15% and north of that. So I just find it hard to think about how we match up the liquidity that is currently on chain versus the borrowing demand that is there for tokenizing some of these assets, given that the duration for some of these are far in excess of 6 months. So you have two problems, right? You have one is the yield type problem. How do you match the yield that you're looking to earn based on whatever the asset is, and then also the lockup of that capital. Because at the moment, you'd be lucky if you were to lock up your capital for 6 months. 3 months or 30 days is kind of what we're seeing. So just to summarize, I kind of talked a lot there, but I think I'm a big believer in RWAs. I just think we're far, far away from tokenizing everything. I think what will help with that is more capital coming on chain. So you're starting to see a lot more asset managers, et cetera, et cetera. So I just think definitely a emerging narrative, but I think maybe expectations are slightly, there's a bit of theater probably going on.
Is Maple solving for some of this stuff right now?
We were last year with that cash management. We have a cash management solution which is short-dated treasury bills, so sub 30 days. It was great. As I said, back in 2023 when 5% was quite interesting. It gave crypto native companies access to treasury bills who didn't have bank accounts, brokerage accounts, etc. And then more traditional players who did have those access, but they kind of had assets on chain that they wanted to get that access because they didn't want to deal with the the on and off ramping. So we do kind of play in that space, but I would say 90 to 95% of where our focus in Maple now is in digital asset lending, and that's where we see the next 18 to 24 months. Beyond that, I think that's when we would probably go back to starting to look at some RWA things when we enter the next bear cycle, because that's when rates come down, particularly on chain rates, and that's where you can have that uncorrelated yield of something that is not correlated to crypto prices, but it is correlated to traditional markets, and that's where it becomes more interesting in our view, or my view, should I say.
Got it. What do you guys think about restaking? I know that's a really hot narrative right now. People tend to have a lot of opinions on it.
I wonder who's going to answer that.
You mean like generally?
Yeah, generally. What are your thoughts
it's
on
not going to go
restaking?
anywhere. I think, look, restaking is pretty exciting. So restaking is a way of reusing staked ETH to provide security to other crypto economic networks. There's a lot of things that it enables. It enables you to play much further out on the risk curve with ETH rather than being essentially risk-free with vanilla staking. It allows you to go a little bit further out and earn additional rewards in exchange for that. So that's great. And the more exciting thing about it is that it opens up, I think, the design space of what's possible. One way to look at restaking is, in effect, sort of programmable consensus. In the same way that Ethereum made a programmable blockchain by generalizing kind of Bitcoin script, restaking allows you to basically introduce a programmable layer to the Ethereum consensus, which I think is a pretty powerful concept. And lots of things that already exist can be made better with restaking, Oracle networks and lots of examples. But it also makes possible other really cool things that were not possible before. So yeah, so we're pretty bullish on it. And I mean, the only other thing I'll say is that I really think it's just going to become built into any staking protocol. I don't really think there's going to be many people that are doing vanilla staking.
Are you guys building restaking right now?
What do you mean, our own native?
I mean, yeah, you guys have a stake protocol, right?
Yeah, so we build on EigenLayer. EigenLayer is, I mean, I guess they invented the category in a sense. But there are others that are, I guess new players that are emerging that are going to be launching restaking platforms. And assuming the products are good and the risk makes sense, our plan is to support multiple restaking options. I don't know that we're going to build our own restaking layer. I just don't think it makes sense. I think if there's other people doing a good job of it, we're just going to build on top of it.
So what infrastructure issues do you guys feel like DeFi projects are currently facing, and what new use cases could be unlocked if we start solving these issues? I know, Omkar, you were at Google working on search and then at Coinbase. What's your opinion on this?
So, I mean, if you were to ask me to pick the biggest problem with infrastructure, one word would be complexity. And DeFi landscape is fragmented across multiple chains. Even on a single chain, it's fragmented across multiple protocols. Data has very different semantic interpretations across different protocols. And it leads to multiple different issues, like either on-chain data is very slow or very expensive or just cumbersome to get. And that leads to a lot of problems when it comes to ultimate end users. For example, we work with a lot of DeFi shops and where people have to manually curate the data, and it takes weeks or sometimes months. So I believe that is the challenge. The opportunity, the other part you mentioned, I see a lot of interesting projects being built and developed right now, which are attacking those problems and complexities, like tackled one step at a time, which is where I see as various different data platforms mature, various different secure bridges are developed. That's where biggest opportunity.
And what do you think by solving this, the way that you guys are solving this, what do you think it enables?
So for example, it would say complex DeFi trading strategies. It would be, let me give one complex example without revealing something secret we are working on. I would say better analysis of data is at a very high level without jumping into secrets.
What about the rest of you guys? What do you think are some infrastructure sort of issues that are affecting us in our industry? We're all in the same place right now.
Yeah, I think the thing that we're seeing is probably the interoperability of liquidity sitting on different chains. So for us, our main business is on Ethereum. We can probably get into that a little later on the pros and cons of different chains and layer 2s and whatnot. But I think a fundamental problem is that liquidity is sitting on different chains. How do we solve for that? Other things that we kind of think of are on and off ramps, more specifically on ramps, I guess. How do we get those fiat dollars into the system? Which is definitely being worked on, but has a ways to go. And then I think the other big thing, which is definitely being worked on, is just the UI of it, right? The overall experience. people expected to still interact with protocols and having good governance and OPSEC around their wallet infrastructure, et cetera, et cetera. So I think there's probably two things. One is like the overall UI, and then just like better education across the board. That's kind of just tied to the whole infrastructure and setup that needs to be for you to partake in DeFi today.
I'm smiling because like everything that Ryan just mentioned is like one big theme, right? Like interoperability, user experience, on-ramp, off-ramp, like.
There's a lot of buzzwords.
Sorry.
No, it's not buzzword. It's not. That's not. But it's all one big problem that our industry just has, right? And it's like
Yeah, totally.
They're all. You can't just solve for one part of it. But when that happens, it's going to be a massive unlock for us. It's just, is that 12 months from now or another decade? Like that's the really hard part, because there's. I'm optimistic, but it's a big problem.
I'm going for 3 to 5 years. So hopefully not 10 years.
I mean, my comment on it is like, we're drowning in infrastructure. Like VCs only fund infrastructure stuff. There's endless versions of everything. 17 different, blockchain models and 15 different layer 2s and 12 different data availability. Like, we're drowning in infrastructure. There's too much infrastructure. What's missing is like utility. Like, people are actually using crypto day-to-day life and external income streams that aren't dependent on just new money coming in to the system. RWAs is as much of a buzzword as it is. At least that's like, these are productive assets that are, whether it's real estate or treasury bills or whatever, it's at least dollars that are coming from productive activity, not just, more gamble coins. My view is almost like it's enough with the infrastructure, like build shit that people can actually use.
I guess that's an artifact of the bear market, where people just build, and now that there are glimpses of bull market, I'm more bullish on more apps and less infra in the bull market.
Well, and it's also like a regulatory thing, I think, because like if you touch a consumer, like Gary Gensler shows up at your house, so everyone just built infrastructure for everybody else who's building infrastructure, and it becomes like this Tower of Babel thing. At some point, like, I guess as regulations, I think, we've seen a lot of that, some of that starting to get diffused. I think more and more people are starting to build things that actually have more direct utility for people.
And to respond to that point, I've seen number of consumers is directly proportional to price of Bitcoin, essentially.
Yeah.
To linking Mike's point to your point, I mean, we need 3 to 5 years to figure out like interoperability. Like, up until that point, though, we need, as an industry, some wins, and I think that's where like RWAs have to work. Like, we have to figure out like what that tangible thing is, and like we were talking earlier outside, like, is it gaming? Like, is that the most tangible real world asset for gamers? Like, is it airline miles? Like, what is that thing that we just need as an industry win? I don't know, but it has to become more real.
Does USDC count as the win of RWA?
I was about to say, I was like, the biggest, like the killer app of crypto is stablecoin, right?
Stablecoin.
Sure.
So we'll keep leaning into that. Yeah.
And there's just a demand for good quality assets all over the world, especially in inflationary environment. And especially as I travel around the globe, I see huge demand for USDC, and people are willing to accept payments in USDC. I have done that in many countries around the world.
I agree.
So,
Are there any other utilities you guys are bullish on?
I mean, we're building a payments thing. We're pretty excited about that. EtherFi Cash, so that's a new, it's I think a new version and a better iteration of a crypto credit card. And so we're super excited about that. I think
You're in the right place at Istari for the payment stuff, right?
Yeah.
Okay, well, with these new utilities, new use cases, there's been a rise in hacks over the past, several years, really, especially during the bear market. What do you guys see as the key security challenges there, and then what kind of solutions do you guys see for this? I'm gonna throw this one to you.
Yeah, for us, I think it's like 2 levels of like infancy, I'll call it. I don't want to say immaturity. I guess I said it. But it's teams that are learning what controls are, what the importance of cybersecurity posture, what the importance of audits and risk assessments and penetration testing, and not just trying to test in production, right? that was cool early on, but like we've kind of used up all our goodwill, and so you've got that, and the other side is just the infancy in the tech. So you've got the people problem and the tech problem, and I was kind of talking earlier where like, you know, custody was really scary. Now it's matured, specifically qualified custody, and then, you know, MPC and self-custody has gotten better and better and better, and then DeFi was really, really scary for a while. Now this, like, we need interoperability. We need bridges to work, like, you know, the deposit, you know, locking and unlocking, burning and minting. That's a very complicated transaction. A lot of things can go wrong, and a lot of things do go wrong. That's the thing that, like, we really want as underwriters. We really want to underwrite, and that's where there's a lot of demand. And I think that's where we have to figure things out. But I think where I like bear markets is that a lot of the flash in the pan, moving too fast, those projects kind of unfortunately they get washed out. People that are really serious, that are really investing, that have investors that are patient in building the teams the right way and hiring the right talent and building the right processes and getting it perfect so that things can be trusted, right? The safety and security is there. It takes time. You can't rush those kind of things, and you know, it may take an extra quarter, but you get it right, and you're not, you know, damaging an entire industry. So I think that's the really cool thing, and I think for us, like the thing that we've been kind of like getting excited about. So like we're launching a website next week, a free website for everybody, to be able to finally have some transparency into loss, theft, rug pull, any kind of hack event. It's called cryptohacks.io, completely free. So before you're, you know, investing in something or you want to do some diligence on something, you'll be able to go there. So that's our little thing that we're giving to the community, where we're like, we needed it anyways to be able to underwrite, and we're like, all right, this is maybe something that, you know, we can make people more aware of risks out.
Yeah, that's great.
In the community. Yeah.
I know, you know, kind of tangential to what you were just saying, you were talking about how builders are just building and not really like thinking about it. That's been one of our big observations, right? We've been building out sort of a better way to manage risk. And what my observation has been that there's all these people who are building the same product over and over again, and somebody did it in the past and didn't do it necessarily in the most optimized or the best way, but, you know, DeFi, people just keep forking the same thing over and over again. It's really cool for me when I see people that I feel like are actually innovating on something, right? Does anybody else have any thoughts on security, risk, sort of issues in the space? You're shaking your head like you do, Mike.
Yeah, I mean, I think certain things have become a lot more, I don't know, table stakes, right? Like, yeah, like audits obviously is almost like the cliche example that there were lots of projects that in some cases had, you know, huge amounts of capital in them without even doing like the basic audits, and now there's like multiple layers on top of that with, you know, real-time monitoring and like you know, attack interception prevention. There's formal verification. There's multiple steps that you can now take to you know, to protect users' assets.
Yeah, the bar has definitely been raised in this cycle.
Yeah. So, you know, I think perhaps the next step of evolution for DeFi protocols is, like now where a lot of damage gets done is more like economic attacks, whether it's like depegs or price manipulation, things like that. And so that I think requires its own set of tooling to, you know, to forecast and prevent those types of things.
Definitely speaking my language right now because we spent a lot of time building that out.
I would like to add that there is always a trade-off between security and velocity. I mean, going back to my Coinbase custody days, the main product was security, and that is being used by 8 out of 10 Bitcoin ETFs today. But guess what? How fast we moved, like, you know, because everything had to be extremely secure, and I mean, every step the way transaction was created and deployed was, you know, we had to jump through multiple hoops. And yes, it's perfectly secure. It comes at a trade-off, and we need to make a case-by-case decision where security is warranted, where velocity is warranted, where we can cut corners. And I I don't think there is one size fits all solution for entire DeFi sector or entire crypto sector in general.
Yeah, totally. That's a great segue actually, because Base has had a ton of growth in this cycle. I've been super bullish on Base; it's been working out for me. And you're seeing these new projects like Moonwell and Aerodrome. I'm in both of them. I think they're great projects. What are everyone's thoughts on the different L1s and L2s and coming into this cycle? And what do you think the impact is going to be on DeFi with this sort of proliferation of different chains?
Yeah, I mean, I think there's a lot of experimentation going on in the space, which I think is a good thing. One of the things that obviously is unsustainable is 50 different L2s that are all trying to build a clone of a DeFi ecosystem where there's 50 different DEXs and lending protocols and CDP, and it's like there's like 10 projects you have to have, and so how many of those need to exist? Probably not 50. So I think there's going to be a few obvious winners. Some of them are probably already pretty well on their way. So I'm more interested in seeing people develop more applications of app chains. I mean, that's something that we're looking to do with our cash product, with like a payments-focused app chain. And I think we've already seen, obviously, other folks do some of that, but I think there's a lot more opportunity for innovation there.
And it depends on whether you see a blockchain similar to a cloud platform where market is consolidating around top 3 in the US and maybe top 5 in the across the world, or it's more like a website where everybody has their own website, similar to how everybody can have their own blockchain.
But it's not the same website.
Yeah,
Yeah, exactly.
It should be differentiated.
But a lot of times
differentiated.
websites are folks of each other too.
Yeah, I think for us, it's it's pretty straightforward, right? It's where does liquidity sit? We get probably every week, a new layer 1 or a roll up, or will come to us, and it's like a chicken and egg thing, right? They're like, will you come build Maple on us? And we're kind of like, well, where's the liquidity? But they're looking for us to bring the liquidity. So for us, definitely, Maple, our entire business, nearly 90% of it is on Ethereum. And as we were kind of discussing just before this, given that it's like an institutional business, our institutional customers, they're less price sensitive to, paying gas when you're doing large volumes. They're more interested in security and even just basics, right? If you're talking about institutional traditional money, just even understanding that it's Ethereum. Like, I know that sounds, pretty wild, but like when you're doing with traditional players, they might even understand or even heard of some of these chains. And that's probably another issue that it probably shouldn't be something that they should be worrying about or knowing about. But then I think about, Syrup, we can get into that in a little bit. But where that audience will be less institutional, they'll be more price sensitive to, transaction fees, the speed of it, et cetera, et cetera. So that's where we'll start to explore, where does liquidity sit that isn't on mainnet.
Where are you guys building Syrup? Aside from mainnet, or is it a secret still?
Yeah, no, good question. And just before I jump into Syrup, I guess, so Maple, if people aren't familiar, Maple is a digital asset lending business. So we offer a direct yield to institutional, our direct institutional yield. But what that is, it's a fully permissioned business. So it's fully KYC'd. It's only for accredited investors and up. But what Syrup is that same underlying product. It'll be a separate loan book, separate entity, but it'll allow permissionless capital to access that same direct institutional yield. So to answer your question, it will launch on Ethereum, just given time, and we want to get it out there. But I think there will be a fast follow, looking at Arbitrum, Optimism, where the most liquidity sits is probably Arbitrum at the moment. But we're definitely open if Arbitrum are listening. We definitely won't pick them. It could be across the spectrum. We'll have those discussions. But I definitely don't think mainnet is where Syrup will live and where it will grow out.
Yeah, I mean, I'm not in the global south, but I don't like paying ETH gas fees. So, who do you guys think are going to be winners out of the emerging chains right now? I'll start. I think Movement is killing it. I don't know if you guys are familiar with Movement. I'm super bullish on Movement. I think Move is a great language. I think they got a cool team, and I think they're making the right moves. They've got enough money. You bring Move to EVM makes sense for me, Let's just go around. I want to hear everybody's picks.
I don't have an opinion.
Okay, no opinions.
I'm
Ryan.
agnostic. I'll do well.
Yeah, definitely. I think EVM chains are definitely interesting to us as a business, but I think on a personal level, I definitely enjoy the Monad team. I've worked and had decent discussions with them, and I enjoy and what they're doing and their independent or their specific use case. So I think if it's an out and out winner, we have to pick one, or you've got to my head. I would say Monad would be my pick, not for.
You can have a second if you want.
Yeah, no, I said not now like specifically for potentially for Maple, but it's like really like what they're doing, and I think it's to Mike's points earlier. It's not the same thing on another chain. It's distinctified in what they're doing and what others are doing, and they have real live use cases on it. So I would be Monad would be my selection. Yeah.
You can have one or two, Mike.
Okay.
What do you think, Mike?
When you're trying to, get people to change behavior, right? Whether it's Ethereum people or I guess Bitcoin people, or their Solana has got its own ecosystem. But when you're trying to get people to change behavior, it can't just be like 10% better, right? Really, the activation energy needs to be 10 times better. And so the move from layer 1 Ethereum to layer 2s, there was that. The value was there because transactions, back in the bad old days, you'd be paying $100, $150 for a swap, and then Optimism Arbitrum launched. Suddenly, okay, now that went to $1, and now it's fractions of a cent, and that market has kind of consolidated. Like I think maybe there's going to be a handful of players, like 2, 3. Like there's not going to be like 50. I think
There'll be a few winners. Right?
Yeah, and I think that's already pretty well consolidated. The L1s, I mean, you've got a few different options, but like, I don't know, it's you've got the monolithic option with Solana, you've got Ethereum with the roll-up centric ecosystem. It's actually hard for me to imagine. Okay, what's something's like a little bit faster, a little bit cheaper? Like that's not enough. There has to be more than that. So I don't know.
So you're bullish on a lack of change, is what I'm after. The winners have won.
Yeah.
What do you think?
I think the most intriguing chain for me is Bitcoin, and mainly because, for many years, Bitcoin was just you buy and hold, and very recently there have been a lot of interesting developments happening on that ecosystem, which is actually I never thought Bitcoin community would tolerate so many runes and inscriptions and whatnot. So that's very intriguing possibility, or even Bitcoin L2s.
Yeah, it's amazing what's going on with Bitcoin now. I mean, so you're bullish on incumbents. I get that. We got incumbents over here, new guys over here. We got a good variety. So, with new chains, new things that are happening, what problems do you guys think need to be resolved for DeFi and for Web3 in general in order to bring new retail users in and maybe reach the same sort of level of adoption that TradFi has? I know, Mike, you and I were talking about user experience stuff before. I'd love for you to share your thoughts here.
Yeah, I mean, it's like DeFi right now is completely incomprehensible to a normal person. For probably everybody in this room, there's just a lot of stuff that you just take as like second nature, trivial stuff that deploy into Aave, put in some capital, borrow some stuff, put it in some other protocol. Like these things are just second nature and obvious to you. But if you imagine, or if you've tried, I mean, I've tried to go to a normal person and explain to them like, hey, you can get 15%, 20% yields, and here's what you got to do, and then like try to walk them through. Okay, you got to get your fiat converted into crypto. Then you got to take that and you got to put it into MetaMask. And
I went through this like 2 weeks ago with a good friend of mine. He texted me and he was like, I want to get into crypto. I want to start like custodying my own assets. And I sent him a text like this, like explaining, go buy a ledger. This is what you do. And he was like, okay, I'll do that later this week. And then just nothing.
That's right. Yeah. Or
too complicated.
It's either that or, it's like 3 days of troubleshooting and like, wait, but like, what do I do with my seed phrase? And then you realize they put everything in like a hot wallet and it's just DeFi is inscrutable to normal people right now. And so we've got plenty of tooling to make this possible, but like the curse of crypto, I think, is there's too much money in it. Like what I mean is just it's too easy to like launch another like Me Too clone project, cash in, and instead of like building something that actually has utility. So what needs to happen is like to build tooling that abstracts and simplifies all that insanity, but still has the nice benefits of crypto, of self-custody, self-censorship resistance, like an ability to migrate away from fiat. Like that stuff just needs to be built. And I think, the regulatory environment is getting a little more friendly, and the infrastructure, as I was saying, like there's plenty of infrastructure to do this stuff now. You really don't, there's no missing pieces. So I think just the work needs to get done to build these tools, to make it simple, and then get it out to into the hands of normal people.
Is there anybody you guys think is doing a good job at this right now?
I mean, Base is super interesting. I don't know, but there's probably others. There's lots of others I can name, but Base is
You think they're doing things for user experience, which are making it easier?
Sorry, you mean EtherFi?
No, I'm saying you think Base is doing. I'm saying.
Oh yeah,
Are there people
just
you
the
think
fact that it's
are?
so easily, like Coinbase has, I don't even know the numbers, huge numbers of users, and they're just making the path. Their smart wallet, like they're making the path into DeFi like much smoother.
They've got the ecosystem.
Yeah. I mean,
I was using the Base bridge, and then I realized I could just put money on Coinbase and then just move it to Base.
Yeah.
It's so easy. It made it,
Actually, something else I would like to add is reliable insurance. I participate in banking system in the US because I know all my deposits are FDIC insured. I can sleep in peace even if my bank goes under, deposits are untouched. And that has been proven again and again and again as many banks go under. I think if you have reliable insurance for your DeFi stake,
So we need like an FDIC sort of thing for
it
for
can be
DeFi?
anything. I mean,
Yeah.
Aejaz probably have
like
something to add there.
It's levels of insurance for sure. I think to go back, I mean, you need a variety of insurance solutions. There's financial lines, there's crime, there's corporate insurance, there's counterparty risk, there's a lot of things, and even for us, there's no way there's going to be one winner in insurance. There's going to be dozens, and so I'll give you the $20 afterwards. But to answer your initial question, I think there's three things that will need to happen. One is it's an uphill battle because we've got to there's like a branding and reputation issue that crypto has to just overcome. We just have to look at it straight in the face, and it's an uphill battle, and we have to get over that. And the second thing is security, which is just as important. It doesn't matter if it's a negligence thing, it's a user. We just have to make it stupid easy, and security is a massive thing that we just have to figure out and make it stupid easy. And the final thing is just user experience, and these things will all take time. But I can't state enough like how much we have to spend time on like on the reputation and branding. And it's everybody's responsibility here to champion that and make it so that it's crystal clear that this is the future of TradFi. Like this will become the future of TradFi. It's not two different industries. We're just the innovation arm of it, kind of thing.
Yeah, there's a project I know the founder of that does ticketing. They're like competing with a lower level Ticketmaster competitor, basically, and they're doing it on chain. My advice, frankly, to him has been repeatedly like, don't make it clear that it's Web3, because that's going to be a turnoff to people. And like to what you guys are saying, we need to get past that, right?
Yeah.
But it's a big uphill battle, especially for an individual project, right? Like I wouldn't even push the Web3 side of it. They're doing it better than what the incumbents are doing in this space. Like it doesn't really matter that it's happening on chain. It's great for us that it's happening on chain.
That's right.
Yeah.
That's right.
I think the only other thing that we probably haven't talked about, but is this regulatory clarity, right? For us all, regulatory clarity. Like for us all to operate in this space, we at least need to know what the rules and boundaries are, or at least be able to have that discussion.
That would be great. I would love that.
Yeah. So like I agree with everything that is said, but I think that is something that is that can solve a lot of problems, and then will stop people going offshore and keep things here in the US.
That's a shout out to like insurance regulators. Like they've stepped up. Like we've
Web3 stuff
for crypto stuff. Yeah,
That's
we've
great.
had regulation, and we've had they've leaned into us. From the earliest days of like when I first left traditional insurance to start Breach. Like regulations were being created in 2019, and they were working on it, a few years before that. So we've had it, I would say, really easy compared to the rest of you guys, because We've just said, hey, it's a thing. People want to insure it. You want to insure a shoe, you want to insure a projector, you want to insure a token, it doesn't matter. Like all of these things are property, and you want to insure the potential loss of it, theft of it, destruction of it. It should not be treated any differently.
Yeah, I did a Twitter space recently with this insurance company that is tokenizing people's whole life policies that you could borrow against them, which is super cool. And like they wouldn't be able to do that if it wasn't being regulated properly, right? And I think it's a really cool idea. It makes all the sense in the world.
Totally.
All right, well, any closing thoughts here before we wrap this up? No. All right. Thank you guys for listening. Thank you, Istari, for hosting this. Appreciate all you guys joining me. This was a great talk.